Good morning, everybody. Getting a little bit of a later start this morning. Had a busy morning, a good busy morning, but a busy morning. So, today, what are we going to talk about? Let's talk about what the quote unquote safe assets are telling us about our macro market condition and what's going on within the commodities market, stock markets, bond markets, currency markets, etc. And then what the riskier assets are telling us or showing us. So what information can we gather from what's going on with the prices of the quote unquote risky assets versus the safe assets? So first, let's talk about historically what the safe assets versus risky assets are. We'll start at what is known as the riskiest asset, and we will go to what is considered to be the safest asset at the moment, anyway. And we will talk about how that sort of happens, why that is. So, riskiest asset right now is said to be crypto. I think there's a lot of reasons for that. I think there's quite a bit of speculation in that market. There's quite a bit of what people call in the stock market a dark pool. Only in currency, it's called mixers. So you don't know who owns what, who's buying what, who's selling what. So I think a little bit of lack of transparency there, and also I think because it is just a new marketplace with a lot of people that are just betting on different scenarios when it comes to crypto. But in any case, it doesn't really matter, right? So crypto is said to be the riskiest asset. The next riskiest asset is said to be commodities, along the lines of things like oil. So oil is the probably central sort of theme, but along all those types of commodities, right? So when you think of oil and you think of those commodities, think in that direction. That is the next riskiest asset, right? Is commodities. Then we move on to stocks. So the stock markets in general. Then we move down to real estate. First to be commercial is riskier than residential. Then we move into fine arts and collectibles. Those are then the next riskiest asset. Then we move into bonds. Bonds being corporate bonds, any bond outside of a government bond. Okay, so your traditional bonds are in there next, and then we have your metals. Your metals are the next safest. And then to complete the roundup there, we have government bonds. So that is what the riskiest assets are to the most conservative or safest, as it's sort of known. So what we want to look at today is we want to say, okay, well, what's going on with these assets at the moment? Because sometimes when we look at this, it can give us an idea of a transition. So every day now, I feel like we're getting more economic news that seems to be bad, with prices moving in the opposite direction, which I smile and sort of laugh because that tends to be the way it goes. Why? Why does it tend to move that way? Well, markets are forecasting mechanisms. I go over this all the time. They forecast what's to come, not what is. All right. So if we want to know what all of the news we're reading today meant, we have to look back 6 to 12 months. Some would argue you can go as far as 18 months to sort of for the news that you're reading today to be valid when it comes to prices. Markets show you what's to come. We have several things that impact these markets. So we just discussed safe markets to risky markets. Now, some of the impactors of these markets are obviously a big one right now is interest rates, inflation, things like this. So what we want to do is we want to separate ourselves from that. We want to separate ourselves from the news. I saw, what was it, 500 billion in unrealized losses by banks came out today from the FDIC. That was like big news that I saw this morning. I think there were a couple other pieces of news that you would consider bigger news, but I think that was the biggest piece of news that I saw today. So you can even go in and look at the banking sector or the financial sector and say, okay, well, what is the impact of that? Is there an impact of that? And as we know, with the markets being made up of predictive prices, so prices that have been forecast, looking at prices today wouldn't do us a lot of good on this news announcing what the FDIC has discovered, because that should be priced into the market 6 to 12 months ago. But what we're going to do is we're going to look at these prices and we're going to see if it doesn't paint a picture or provide us with a little bit of clarity as to what's going on in the market, and then what assumptions we can take from that. As you know, I follow in the belief that cash flow going in and out of assets is the biggest predictor, along with the emotion, the sentiment behind what's going on. So the EQ, so the emotional intelligence behind the movers of the market, and then the people that tend to be a bit manipulated, which we can call those the strong hands, the more knowledgeable hands. We can call them the weaker hands, retail. Some people call them the, what are they? Big money and small money, whatever terminology you'd like to use. So let's take a look at some asset classes and look at their prices and see what we can surmise from that. Let's jump over here. So let's go ahead and start with the quote unquote riskiest asset class, and we'll move into crypto. We'll go on to Bitcoin simply because Bitcoin seems to be the best well represented in something that everyone looks at in the crypto space. Outside of that, I realize there's Ethereum, there's different coins that matter, but let's just take a look at Bitcoin and see what we see. So what we see in Bitcoin at the moment is it appears to be at this high. We're looking at a weekly chart, folks. So it appears to be at this price high between what? I don't know. Well, I guess 1,200. Right? I mean, is that accurate? 1,200. Well, I guess you could look at even the low price of that, which is like, no, just call it 1,200 to 1,400. And it looks like we've kind of been in this range for what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I don't know, 14, 15 weeks. So we have 14, 15 weeks, approximately 4 months sitting up here in this range. Now, what does that mean? Well, if you follow what I believe in, then you believe that market tops take time, because traditionally that's a distribution of assets from strong hands to weak hands, from institutional to retail. That's sort of the turnover that creates the ebbs and flows of markets. So from that standpoint, what we would also look at is trading activity, which is down here at the bottom. It's volume. Would you say trading activity has picked up or gone down since we've been at these high prices? I think it's pretty obvious here. If you look in the background at the rise, right? So we have a price rise from I don't know, 330. I suppose is the wait a minute. Why is this telling me? Hold on 1 second here. 335, 321. No, that's accurate. Oh, I know. Price has not made any sense to me here. I am looking at the market cap. Oh, goodness. It's going to be the same picture, folks, but it's going to give me. I'm going, what's going on with price? What's going on with price of Bitcoin? I don't understand what I'm looking at. Prices weren't making any sense to me whatsoever, and neither was the trading activity and the volume. This is what happens when you're live, folks. Apologies for that. So we come back and we look again. So we're here at market highs. It's the same length of time, right? So it's still 4 months. What's going on with volume? Well, obviously, volume, there hasn't been a lot going on here. But what we can say is that prices of Bitcoin are back at the highs of where they were in 21 and 22. All right. So we're back in that same range. And we've been here for about 6 weeks. 4 months, 16 weeks. Everything else I said is still accurate. So that's Bitcoin. All right. So we look at Bitcoin, we say that's a risky asset. That's what that's done. We're sitting at those highs. And apparently we've been sitting there for quite a while. Let's head over to the NASDAQ. What do we see here? Well, we're definitely at new market highs on the NASDAQ. We've been trading around in this area for roughly the same amount of time. It's not very different. What's going on with volume? Well, very recently, trading activity has substantially fallen off. Why is that important? Well, with the corporate buyback program in full effect right now, and that should be creating, according to Goldman Sachs, 5.5 billion in daily buying flow, to have trading activity volume drop this much on a weekly basis for the last 4 weeks. That would tell us there's a lack of incentive to buy. So there's a lack of willingness to buy by larger hands, right? By the strong hands, the big money, the institutional money. So I would say that's not, that is, I would say, a negative. That's not good. So right now, as far as crypto goes, doesn't look like there's a big change in trading activity. In the stock market, it appears, at least in the NASDAQ, that there is. We can take a look at the S&P 500. Let's do that. Okay, it looks the same. Looks the exact same. So we move on to, what will we say our next one was? So we went from crypto. Oh, commodities. Let's take a look at oil. We'll do that via USO. What has oil been doing? Well, it looks like it's trading in a range. We're going to have to zoom in a bit because of the way this chart setup is. It just is what it is. What has gone on with oil? Well, it appears as though there was some pretty significant trading here at these high prices, and now price has fallen off pretty substantially. So in oil, it looks like there has been somewhat of an exit in oil. I mean, I think is fair to say. Then we will move on to real estate, commercial real estate first. What has gone on there? Pretty stagnant. I don't see a lot of movement there. Let's look at bonds. So we can look at an aggregate bond index. Obviously, we know that interest rates have played a role here. Let's zoom out on this one. We had to zoom in on oil. So does it look like volume has picked up here at the lows? I would say yes, it does look like it's picked up. So there's some interest in bonds there, most certainly. Let's take a look at metals. We'll go over to gold. Gold prices have definitely risen. If we look in the background, though, we can see at these high prices where the volume is, it appears to be substantially high volume, and it definitely appears that way now. So while price is sitting up there, I would say there is some trading activity outlier, and this would not be viewed as good. This would definitely not be viewed as good. This would look a lot like what the commodity oil looked like before its price had fallen. So let's go ahead and look at government bonds. Okay, this is the 20-year treasury. This is definitely volume here. This is definitely an increase in trading activity. So I would say if I were looking at this from a macro perspective, it appears as though risky assets have been sitting at high prices with lackluster volume. If I were to look at your safer assets, so we looked at gold, it looks as though price has definitely increased in gold, and it has done so on higher volume, but there does appear to be higher volume at that high, and it is sitting there. If I were to say anything, maybe there's a correction coming in gold, but it does look like government bonds are well suited or poised to move up, which would mean rates are poised to move down. And as we know, with inflation tends to be very good for risky assets such as stock market. When rates drop, it tends to be a negative. I would say from a macro picture, just looking at prices, it looks as though there may be a coming move into safer assets. It looks like they're being accumulated. We're going to zoom in on the markets later today. We're going to actually digest what price and trading activity is doing. I'm going to stop the screen share for now. We're going to come back. So what I want you to do is I always want you to evaluate this information for yourself. You saw the same things I saw. It looks to me as though for the last 16 weeks, what you would call your riskier assets have sort of sat there. Your Bitcoin, which is considered your riskiest asset, has not gone to a new high. Your oil looks as though it's been sold off. Your stocks sitting at a high for 16 weeks, for 4 months. We're starting to see a lack of volume, a lack of trading activity. That would mean a lack of desire to own those positions. It looks like there's an increase to desire your government bonds, more so than your corporate bonds, I would say, right? More so than your aggregate bonds or corporate bonds. Looks like your safer assets, your interest rate sensitive assets may be maybe being acquired. So we'll look more into that. But I want to continue this along that idea that we're in a bubble now, and not to prove that there is or isn't a bubble, but more to provide information to you so that you can make up your own mind. I hope this was helpful. Please leave questions and comments. As you saw in the live, I make mistakes too. I didn't even pull up Bitcoin. I was pulling up its market cap, which actually is funny. So it's going to stay. Thank you for joining me. Listen, if you're having a hard day today, and we all have very hard days, and try to look up, try to smile until it becomes real. Do something that makes you smile. Do something that makes you happy, right? Smile, fake it till you make it. Keep a smile on your face until it becomes real. Try to look at the positive. Tomorrow will always be a better day. Every day above ground is a good day. Thank you so much for joining me. And I will go live again later today. As I usually do. Sometimes I'm not able to get back on, but today I definitely intend to, because what we're going to break down today is what we see. I'm going to go ahead and tell you what I see as far as the market's price, and we're going to look at the intermediate term and short term. So join me today for an intermediate and short term look at the markets. We're going to look at the NASDAQ and the S&P 500, and we are actually going to decide what I'm going to share with you, what I believe is coming in those two markets. All right, I'll see you later today.